Out today, Liz Klayman is there with Dylan Radigan.
Well, a slow start this morning meets a renewed wave of buying interest this afternoon as the technology and names that continue for a second day to provide the support. The final and most important hour of the trading day is underway. Welcome to the closing bell. I'm Dylan Radigan here at the New York Stock Exchange. Good afternoon, Liz.
Good afternoon, Dylan. Good afternoon, everybody. I'm Liz Klayman in for Maria Bartiromo. In the markets right now, here's what we're seeing. Modest strength across the board, with pretty much the NASDAQ posting the biggest percentage gain so far today. Advancers are outpacing declining issues at both the NYSE and NASDAQ right now. But let's whip you through the major indices. Right now for the Dow, we're up 23 points to 13,566, off the highs of the day, but way off the lows as well. Here's the NASDAQ, and it has been the shining star for today, at least up 12 points or 0.5%. Very much close to the top of the session here to 2591. And the S&P 500, just a fraction above that record close, so it is up nearly 2.5 points to 1527 and change, Dylan.
Well, taking a look at today's story stocks, casino operators, the big market headline here, Kirk Kerkorian expressing interest in buying 2 Las Vegas properties from MGM Mirage. MGM, its biggest one-day move ever. Kirk Kerkorian, 89 years old. Look at that, $17 the move, in the stock trades just south of $80 a pop right now. I'll add to it, shares of subprime mortgage lender Fremont General, which are also higher today. The company said it's proposing to sell its commercial real estate lending business and its outstanding loan portfolio to iStar Financial. They say it'll get just under $2 billion for that. Shares of other lenders also higher on that news. And then OSI Restaurant Partners agreeing to a sweetened $3.1 billion private equity takeover. What would an open stock market be without a private equity deal? OSI owns restaurant chains like Outback Steakhouse. Liz.
But first, our team is covering the markets. Look at this. It's a 5-box. The NYSE, the NASDAQ, Chicago Merc, and the NYMEX, along with our special guests. First, to Bob Pisani, who is our eye on the floor today. Bob.
And quietly, slowly but surely, we've been approaching the highs for the day. Let's take a look at the markets here in the middle of the day. The important thing about what's going on here, major indices right across the board near historic highs. And I'm particularly watching the Russell 2000 hitting its highs for the day, the small cap index, the mid cap index hitting its highs for the day. The S&P 500 has been fluttering around, but essentially we're there right on the edge of historic territory as well here. The good news here, the global growth, the buybacks, and the M&A activity, and in particular today, rumors about M&A activity remain the driving forces in the market. Number 2, I saw oil down over $1 today. After the run-up we've had in the last week, that's a little bit of a relief. And number 3, short interest at the New York Stock Exchange hit an all-time record. The numbers reported yesterday. And what it means skepticism is high. It means a lot of people are still not in the market. That represents people who might get in if they could get enticed or forced to in the near future. It's not all good news. There's a little bit of bad news out there. Retail sales were a little bit of soft. Some of the retailers reported soft numbers. The biggest thing that I have had as a discussion today with traders is that the bond yields have been rising here. Take a look at the yield on the 10-year for the last 3 months, because today we're sitting at the highest levels for the yield, and that's a 10-year yield since late February. Now remember, what's one of the underpinnings of this market rally we've had, and that is lower interest rates. Higher rates could limit global liquidity, and remember, that's been an underpinning for the market here. The dollar has been rising recently. Maybe that's a factor here as well. But I can tell you this, remember Pisani's law, when stock traders start talking about bond yields, pay attention, because that is not a normal topic of conversation amongst stock traders. You would think with bond yields moving up and mortgage rates potentially following very quickly, home builders would not be moving to the upside today. You would be wrong. This is a little bit counterintuitive here, but home builders seem to be caught up in some other things that are going on here. Standard Pacific's had unusual option activity here today, is on the upside over 5%, and it's dragging all the other home builders with it today. Let's go to Scott Watton. They're standing by at the NASDAQ.
Hey, Bob, thanks so much. Yeah, we started a tick higher just about the lunch hour. Really been on that steady stream since then, and really having a pretty solid day here. Let's go through some of the stories, the story stocks of the day. Celgene, for one, up nicely today, just about 2%. Mid-stage trial of its experimental psoriasis drug reaching the main target, the company says, also accelerating now that drug's development. Nice gains for Celgene today. Intel, big story yesterday, hit a new 52-week high, and continuing that run today, it's up another 2% in a new venture partnership with ST Microelectronics. Intel gets a 45.1% stake in that alliance and a $432 million cash payment. It's for flash memory chips for mobile phones and music players. Intel also saying that its gross profit margins are going to improve from that deal. And here's an interesting story as we move on to talk about Palm. I want you to take a look at an intraday chart here because Palm shares are up more than 2% right now. They've canceled their appearance at a J.P. Morgan technology conference up in Boston. We've got a team on this story making calls to try and figure out what happened, but you can take a look at that chart. When that news came out, you can see the spike there, and it's just kept on going. Certainly, it's off its best levels of the day, but nonetheless, something going on there with Palm, and the reason it did pull out from that J.P. Morgan tech conference in Boston. By the way, our Bertha Coombs is up there investigating that story. Staples, meantime, as we take a look at some of the retailers, down 2.5% right now, said its second quarter and full year earnings would be at the low end of the range. Pacific Sunwear, interesting as you look at this stock trading down by 2% because this stock was up. They beat and reiterated the outlook for the second quarter, said they were looking for a modest uptick in same-store sales. Nonetheless, it's off its levels. Now it's to the downside. Children's Place, though, having a good day, up 4%. Their revenues increasing 12%. And if you notice, XM Satellite Radio, if you come back out here to the wall, let me just touch on this before we go because the shares are down just about 0.5%. They said now that they have corrected the outage which they had for the past couple of days due to a software situation. Liz, I'll send it back to you.
See, now I thought it was just my own car, Scott.
No.
All right, a big day in our nation's capital as the U.S. and China kick off their latest round of strategic economic dialogue. Treasury Secretary Hank Paulson meeting Chinese Vice Premier Wu Yi as the countries try to resolve ongoing currency and trade disputes. Paulson stressing how important it is for China to open up its economy, but cautions that increasing political pressure demands action sooner rather than later.
Our policy disagreements are not.
Fed's May manufacturing index shows a further decline in activity in the region, but a possible economic slowdown still isn't the top concern of Richmond Fed President Jeffrey Lacker. Mr. Lacker tells CNBC battling inflation should remain the central bank's top priority. Here he is.
I don't think that the moderation we've seen
of more rate hikes. But despite that, he is not a voting member of the FOMC this year, if that puts it all into perspective for you. With all of that in mind, let's find out what bond investors are saying right now. Let's get right to Rick Santelli. He's been hanging with them live at the Chicago Mercantile Exchange. He's got today's bond report. Rick, what are you hearing today?
Well, you know, Bob Pisani said equity traders are talking about interest rates, and I'll tell you, interest rate traders are talking about Europe, because Europe in many ways is leading rates higher and not only prices today, the same color as I get when I fill up. What's going on, Sharon Epperson?
You're right, Rick. We are seeing lower energy prices across the board here today at the NYMEX, and we're looking at oil prices falling about 2% below the $65 mark on the June contract. Keep in mind, though, the June contract did expire today. July starting to trade, and that as well is below $66 a barrel. Part of the weakness in oil due to the fact that we saw extreme weakness in gasoline futures. Gasoline futures down almost 4% on the day. And what happened there? Well, Colonial Pipeline, that's of course a key pipeline going from the Gulf to New York, that pipeline company is saying that they actually cannot fit any more gasoline in the pipeline, even though customers want to put it there. What does that mean? It means refiners are probably producing more gasoline than we expect, and those extra supplies, part of the reason why we're seeing weakness in gasoline futures. We're looking at the weekly inventory data coming out tomorrow at 10:30 a.m. Eastern time as well, looking for an increase across the board in crude, gasoline, and distillate fuel supplies. But the key number will be gasoline. Will we see an increase of 1.4 million barrels as the analysts surveyed by Platts are expecting? Also, will refinery runs tick up as much as expected? We want to try to get to that 90% capacity level. That's
all right. Here's a question for you. How's the Dow Jones Industrial Average like Rodney Dangerfield? Our next guest will shed some light on that riddle right now and maybe turn it into some profits for us. Joining us, David Bianco, Chief Equity Strategist at UBS. Jim Paulson also here, Chief Investment Strategist, Wells Capital Management. Mr. Bianco, I'll begin with you. Why do you believe this market gets no respect?
Well, we wrote that report because the market's been rallying. It's been criticized for rallying in the face of soft U.S. GDP performance.
Drawing the multiple down and yet seem quite comfortable with that.
Well, it's not just
inflation. We've got 2.5% core inflation. We've got sub 5% interest rates. You know, we've been growing earnings 2 times the rate of long-term interest rates for quite some time.
I mean,
And I think we're doing all of this.
Yeah.
What?
I mean, the other thing, I got to get out of here. What about one of those who argued the credit bubble, that money's too cheap, that we're making stupid loans at the end of the day, for sure. Looking at 45 minutes left in the trading day. Dow Jones Industrial Average, 18 points, modestly advanced. The tech stocks over the NASDAQ continue to perform well, notably the chip names, Liz.
We're digging deeper, Dylan, into the energy story. Gasoline prices hitting a new record, inflation adjusted no less. But are things really as bad as they seem? Up next, a reality check on prices and, of course, the overall sector.
Plus, are there still any cheap energy stocks out there? You bet. I was just talking about how low the multiples are on the energy names. If you look hard enough, you might find yourself a nice list. We're going to do a little bargain hunting a little later on.
And then after the bell, sick and tired of rising prices at the pump? Well, now you can fly for less than a tank of gasoline. But can such an airline really survive with fuel prices, jet fuel prices so sky high? We'll ask the CEO of new no-frills airline Skybus today at 4 p.m. Eastern.
But first, the most active names here at the New York Stock Exchange. Pfizer sitting on a $20 billion cash hoard. GE, Dynegy, Advanced Micro, and EMC round out your top 5 on a Tuesday afternoon.
You're watching Closing Bell on CNBC, America's business channel.